Super. We are going to have tables and chairs, which probably means we have a panel coming up. I think there's a gentleman called Christian, the Giorgio, backstage. So if you are there, can we give a hand to Christian, please? Christian, come on up. Just Christian. Only Christian. All right. Christian, what are we going to do now?
Now we're going to have hope it's going to be the most fun panel you're going to see today.
Okay.
It's going to be a reward for the ones who have waited so far to the day. It's on the commodities industry. Mm-hmm. It's under the title Cryptovalley meets Commodity Valley.
Okay.
Because Zug, besides being the crypto center of the world, so to speak, it is what it used to be, but it is still sort of a very important center for the commodities market.
Excellent.
Big players here.
Super. Well, you have a seat, and can you please give a hand to all the panelists?
So thank you very much. First of all, I have to excuse the fourth panelist, Martin Fasser from the Commodities Association Zug. He had a business meeting that went longer as planned, something that's never happens, right? So he couldn't make it. So with me, I have Jessica Fung from Pala Investments, Thierry from TARCO International, and El Presidente, Lucas Betschart from the Bitcoin Association. I'll let these lady and gentlemen shortly introduce themselves. Jessica?
Right. So I'm a head of research at Pala Investments. We're a private equity fund here in Zug, and we invest in metals and mining.
I'm Thierry Ruiz. I'm the founder of TARCO International. Formerly, I was trading commodities, and I heard about Bitcoin when I heard about mining. And so I thought to myself, I need to check that up.
I'm in this space since 5.5 years, usually a software engineer working with traditional cryptography products, and now more and more writing emails, meaning being a technology consultant.
All right. So thank you very much. So we're going to, now the commodities industry can be looked at from different perspectives, and we have very much a broader spectrum that we want to cover today with this panel. And there are two main areas that we would like to explore. The one thing is using commodities as an asset, as a value, in terms also as a backing for currencies. And we have also the aspects of applying the blockchain technologies and cryptocurrencies to the industry itself that is facing its challenges. And in fact, it said that so the commodities industry is a multi-trillion-dollar industry worldwide that still uses pen and paper. So I guess it's safe to assume there's room for improvement. And some say that this industry is now set to be put on its head. So we'll discuss about that. Now, I would like to start it off by asking Thierry. You're doing, cool things. Can you quickly explain what you're doing?
Well, let's start from when I heard about Bitcoin is a peer-to-peer electronic cash system. And I said, is it? And I love the libertarian idea. And I said, well, that's cool. It's supposed to replace fiat. And what is fiat? Well, fiat is when it's not backed by anything, right? And I said, well, let's look it up. And then I heard about forking. So for me, it was like, well, the minute you start forking it, you become fiat. So as a hardcore libertarian type of golden guns, right? I was like, let's look at track record of history. And so I thought, oh, well, the chemical element of gold is immutable. So in other words, it was immutable before immutable was cool. And it's 3,000 years of evolution of having gold as money. And I think it's anti-fragile in the sense that the more you shit test it, the more you get back to it. That's what anti-fragile means. So I'm issuing a token backed by gold, 1 gram, 1 token. And the idea is to become the Bretton Woods system on steroids with as decentralized as possible. So that's what AGAU is, AG for silver and AU for gold.
Okay, so basically you're reintroducing the gold standard, right? That we.
I'm not reinventing the wheel. I'm just
left
taking something that works
a few
and
years
that
back.
would work, and then just make it even better and use the current technology that allows us to decentralize the politics of money, basically.
Okay, so Lucas, you as you can tell me if I'm crossing a line here, but as a Bitcoin maximalist, so backed by trust. So what's your opinion?
Well, first I disagree with the forking because the value of Bitcoin is really in its network. So just because you make your own coin doesn't mean that I accept this coin also. So the coin is just worthless in the end. So you can make as many forks as you want. It doesn't really matter for Bitcoin. And then, I mean, where does the value of gold come from, in your opinion?
No, that's a very good point. But then when I started, I said like gold is anti-fragile. I think Bitcoin, great idea. But it's not technologically resistant, meaning in 1,000 years, your Bitcoin is going to be outdated. There's going to be Bitcoin Cash and the other Bitcoins and so on. So I think all of this is great, but you don't really have the value. The value of Bitcoin, when I started looking at it, was I understand mining, how much dollars it takes you to take an ounce off the ground out of metal concentrate. And I think for Bitcoin is the technology and the energy. So some people would argue that's a huge waste of resources, just as much as that's a huge waste of creating a stone that people want to store. So in this case, we basically have the same problem here.
Okay.
So if Bitcoin is still around in 1,000 years or not, I mean, if I'm still around in 1,000 years, I'm really happy. So this is not really a problem for me. And also I would distinguish between Bitcoin, the currency or the asset, and Bitcoin as the network. So I mean, you can have the limited supply of Bitcoin and using different technology stacks.
Well, there is a point because you do care about your Bitcoin lasting 1,000 years because the whole point is to store the value, not for me, but for my kids. And if your Bitcoin, you pass it on generation after generation, but no one cares about it, then, I wake up in 1,000 years and then there is better technology. Why would I care about Bitcoin? Gold.
Yeah, technology, but the asset can still be Bitcoin. I mean, you don't like it is now. Everybody creates a new currency when they have like a new feature for their blockchain. That is actually not needed from a technical perspective. It's needed if you want to finance your project. I understand that. It's fine, but at least say it like that. But from a technology perspective, you can have different blockchains and still Bitcoin as a currency, or different means of payment systems like Lightning and Rootstock and whatever, but having Bitcoin as.
The value of Bitcoin, I agree, is the value of the network. But that's the same when Ponzi schemes talk about their value.
So, okay, with the Ponzi schemes, okay.
Can I jump in here as someone who's not,
Jessica,
So I agree with you, Thierry. Like there are both Bitcoin and gold have the same challenge. And as investors in mining and metals, you can imagine we struggle with this a lot in terms of what is the actual fundamental value of it. And why is it still in US dollars, right? I mean, if we're trying to get rid of US dollars, but Bitcoin can be exchanged in US dollars and gold is quoted in US dollars, like at what point can you trade gold for Bitcoin and it makes sense there, right? I mean, that's the underlying value, is being able to understand that. We have no way of doing it because we talk about mining costs. We know that has nothing to do with the gold price.
Well, it's a lot of energy price. It's a lot of operational costs and labor and everything that takes it. But to answer your question, wait until my token is launched, and then you will be able to exchange all of your shit coins for my real asset valued coin.
Okay, so Ponzi scheme.
That's quoted in US dollars, by the way.
So, now, Thierry, one last question quickly on this topic. Where do you store your gold?
So that's where I get shit. It's like, hey, it's centralized because your gold is somewhere in a particular place. But
can you disclose that place?
It's mainly in Switzerland and Liechtenstein because so far discovered, at least to my experience, is the best when it comes to private property laws, and it's outside the banking system. It's private vaults. But to answer the question, centralized, yes. But you and I are centralized, and we all flesh and bones. And at some point, you have to centralize because that's what we live in. Yeah. So until we all plugged into the matrix and we all exchange energy and time, which is, I agree with that as money. But so far discovered, well, we're still stuck with the current system.
So Thierry is in his former life, let's say, he was also a commodity trader. We'll get back to that topic, you know. Now, a commodity has a sort of a life cycle, lifetime. So it gets mined, and then it gets, you know, refined, and then it gets shipped and formed and used. So Jessica, can you talk a little bit about, you know, this multi-trillion industry, right, that we say is still using pen and paper? So what are the main challenges that they're facing?
Yeah, so it uses pen and paper. I mean, email, same thing.
Yeah,
right, at the end of the day.
let's consider that paper.
Yeah, that's it.
Not digital enough.
so there are a number of challenges, two big ones. One has to do with financing the trade, and that means, you know, for banks to give you credit in order to buy whatever it is that you want to buy, they need to know that you actually own that material.
Yeah.
And at this point, and we had a massive fraud case in China back in 2014, where there was a shipment of copper, and the trader had pledged this copper to multiple banks and received 3 times as much as he was supposed to. And then when the copper arrived, you know, the banks didn't know who owned it or what was going on. It was, you know, it was.
JP Morgan and Goldman Sachs did the same thing, but they do it on a regular basis.
Yeah, so it's kind of, so that's a problem, is financing the trade. And the only way that commodities, I mean, Thierry knows this very, very well, but it's a huge part of trading commodities is being able to get the credit, you know, being able to do these deals, and as you sell it on, you know, who owns this material. So I think that's one big part. The second big part that is
the ownership of who
it's the ownership
owns
and the
material at which
financing,
point, right?
exactly, and not double pledging your material. And banks, they can't take that risk, and so they'll actually go to the warehouse with you and say, okay, is this ours? How do we know that you haven't pledged it to anybody else? You can try to prove it, but it's very, very difficult. So that's one of the ways that people are looking at blockchain, for example, to be able to transact this. The second really interesting development for commodities is obviously with sustainability. Yeah. This is a huge deal, especially with electric vehicles and batteries, and everybody knows about the plight of cobalt in the DRC and child labor, and Apple and Samsung saying we cannot buy this material, but at the same time, so much of it comes from the Congo. How do we know that we're getting sustainable material? And you have investors who are very active saying, I want you to be able to trace this all the way back to the source, and there is no way to do that right now. So that is another way in which I guess a lot of these companies are thinking about using blockchain so that you can know that your supply of material is sustainably sourced.
So this certification of origin, knowing, you know,
exactly,
coming from a sustainable source, from non-sanctioned countries, we need to take care of that, right? So, and knowing who owns. Who
produces.
I think there's 2 main things: is transparency, one side, and efficiency, and that's applicable to a lot of other businesses. But for the transparency side is the problem with commodity traders is they actually benefit from the transparency because the whole business is arbitrage. So this industry, I believe, will be disrupted, not necessarily by themselves unless they're smart and they cannibalize themselves, which they should, but they won't, because of conflict of interest. And the second thing is efficiency. So efficiency is how can we use the blockchain or a cloud that is secure so they can put all of the documents in together, right? The bill of lading, the credit finance, the testing, certify what it comes from, et cetera, et cetera. If you can manage that within the supply chain, then you'll be a winner. And I think that's really where the value of the blockchain as a system comes into the business.
Yeah, let's make this step and jump, let's say, from the actual challenges that have been described. And this morning in another panel, one of the panelists said, blockchain basically offers 2, let's say, cool things. One is be able to better money, frictionless money, and an identity, right? Identity meaning for persons, but we can imagine, you can assign an identity, unique ID to a piece of metal, to any object. So we have already addressed that a little bit. Where do we see the opportunities to use blockchain technology from, when a piece of metal or a commodity, a material is born, up to the end consumer. Right.
Yeah, well, I think Thierry hit on it exactly. There's a lot of efficiencies that can be made. There's a lot of knowing that all the paperwork that you need to prove a whole bunch of things, and therefore you can have almost instant financing, because once you recognize that you've got a smart contract that says, yes, I own it, blah, and the money moves. So I think that's one way of doing it. I think the biggest challenge that the physical commodities trader has is actually convincing people that the physical material is the same as what is on the blockchain. It's, we have all these digital assets, and that's fine because it's created in a digital realm, and therefore you know it.
You can verify. Yeah.
Exactly.
Don't trust, verify. Yeah,
but if you wanted to say, this is my chair, I'm going to put it on a blockchain, but what if I switched it with that one? I mean, how do you know that I haven't switched the physical?
Yeah, so that's the
asset?
problem, linking the physical to the digital, right? You were mentioning that.
Well, I think linking the physical to the digital is anyways a centralized problem, because the minute you need to use a physical material that exists in the world to an information system, you need to have a trusted party in the middle. And that's really where the burden happens. Because I can say, well, my mine doesn't use baby hands, kids to do my mining, but who's going to verify it? So at some point, you still need the trust. So that's what I was saying, right? Until we are all ourselves decentralized, we will need that trust. And so I think centralized parties can be the next burden, and most likely this can also be solved by consensus, with people being rewarded by actually verifying independently. I don't know, but
Can this be, for example, a new role in this ecosystem? So try a central authority. I'm just thinking, from the top of my head now here. So we're doing it live. This is live. Can we do this? Can this be a new role? Like you were saying, traders, if we do more efficiency, probably traders are not going to be happy. They're going to be out of business. Can there be a new role? Like
traders are going to become these.
No, you can't trust a trader.
I never said trust a trader. I need to trust.
You need to trust. You have to recount your fingers. No, you need. No, actually, you do trust, because a lot of contracts are on the shake of the hand. Actually, so that's another thing. Yeah. The trust is where you can say, okay, we have a trusted system. We can utilize it for trades. But then the last 2 points I want to mention is, yes, there's a room for consensus, in the sense that if you have a reputational rewarding system and a consensus so that you can verify that what you say is true, then most likely you'll be able to make it efficient and make it really trustless, or at least consensual. And then the second point I want to ask is, when it comes to mining, right? You have the energy and the hardware.
You mean mining, crypto mining?
Mining Bitcoin.
Because we have the real mining here represented, and we have the crypto mining over there.
When it comes to mining Bitcoin, there's the energy and the hardware. And the problem is, because of the exponential form of how the hardware works and how it becomes more and more efficient, are you not outdated very quickly and then just waste a lot of resources, arsenic and mercury and all of that? I think.
Not so much anymore. I mean, the years past, it was a catching up, but now we're just going with the general research, and it will take longer until your hardware is outdated.
More efficient. Yeah. So wrapping up. Well, thank you very much, first of all, for this short but lively discussion. I hope the audience has enjoyed it and gained some new insights into this very, in my opinion, fascinating industry where there is a lot of opportunities, a lot of cool things to do. So, one last word. Is blockchain going to help? Yes or no? Let's do like Dan did this morning.
Do we only get one word?
One word, yeah, one word.
Yes.
Yes? What do you think?
Yeah.
Consensus.
Yes or no? Consensus? Lucas?
I don't know at all.
That's 3 words. But anyway, thank you very much.
Yeah.
Thank you, guys.